Right, your time now is 2 p.m. and you're watching the Monday edition of Market View right here on Eswatini TV. I am Notile Sitole, glad to be your host this afternoon. The Kingdom of Eswatini is making great strides in the tourism sector, recording a 16.3% growth in international arrivals for February 2026. A total of 84,744 visitors entered the country during the month, a clear indication of recovering travel confidence and strengthening regional mobility. Now, Africa continues to dominate as the primary source of tourists, with the SADC region leading the charge. However, arrivals from South Africa, Europe and the Americas declined. In conversation with the Research and Statistics Manager for the Eswatini Tourism Authority today, we want the numbers to tell the story. Can Eswatini position itself as a competitive destination in a changing global tourism market? But first, our business stories. In our business news, we kick things off with this. Last year, the Ministry of Finance reported investing approximately 84 million into the Africa Strategic Investment Alliance to support small and medium enterprises in the country, especially the youth, women and businesses belonging to people living with disabilities. With the alliance now officially launched in the country, we questioned the Minister of Finance, Honorable Neil Reichenberg, on the strategy to ensure that local small and medium enterprises fully capitalize on this funding and how the invested capital will continuously revolve to maximize impact.
One will be using our investment as a first loss. Let us just say you are funding SMEs in this mechanism now, where it's going to be fully transparent. There is still going to be some loss. There's still going to be some SMEs that don't end up paying back. And so it means that we go out to the market looking for money, and we say, right, okay, Eswatini, is anyone interested in making a return on investment? But at the same time, we are using Eswatini's money to take the first loss on, which means that we might lose quite a large portion of our 5 million, but we use our $5 million to raise another $30 million, because if an investor with 30 million knows that, okay, I'm going to SMEs, because everyone's scared of SME space, because people feel like SME, the NPL, the non-payment of the loans is too high. But now the government says, no, we'll use our money for the first loss, which means that the first 20% of NPLs is for government's balance sheet. And only after that does the funders' money come in. Now it means that the funders' money comes in a lot cheaper and more chances of us getting it. The chance of getting it is much higher, and the chances of having losses are much lower, and the cost of his funding comes down, meaning that now the SMEs cannot not loan money from the loan shark, because the problem at the moment is they can loan money, but it's loan shark kind of money, and it's 30% a month, which we're talking of now, trying to get that to below 15% per year for them. So it's dramatical reduction in the cost of funding. And so if we can use ours as a first loss and crowd in, is the funky word used these days, other funding, it means that we now have $35 million for SMEs.
The country's tourism sector is experiencing strong growth, but warning signs are emerging as key markets such as South Africa and Europe show a decline. In response, the Eswatini Tourism Authority is stepping in, bringing together industry leaders, including accommodation providers and tour operators, to reset strategy and protect this growth momentum. The focus is now on finding practical ways to sustain and strengthen the sector. Minister for Tourism and Environmental Affairs Jane Mkhonta has urged the industry to develop attractive and competitive packages that will encourage visitors to stay longer in the country.
As Eswatini recorded a landmark achievement of over 1 million international visitors arrivals in 2025, reflecting sustained growth of 7.5% year-on-year. This performance affirms the sector's continued recovery from the adverse effects of COVID-19 pandemic and signals renewed confidence in Eswatini as a competitive tourism destination. Withstanding this progress, it is important to situate our performance within the broader regional and global context. Globally, tourism continues to recover towards pre-pandemic levels. Although this recovery remains uneven due to microeconomic pressures, rising travel costs and shifting consumer behavior. Regionally, the South African development community remains the primary source of our tourism flows, contributing approximately 88 to 92% of arrivals, thereby underscoring the strategic importance of regional integration and cooperation. At the same time, key performance indicators such as the average length of stay and visitor expenditure remains below optimum levels, highlighting the need for deliberate and targeted policy interventions to enhance value capture within the tourism economy. The presentations to be delivered during this workshop, namely the Inbound Tourism Performance 2025, Domestic Market Segments 2025, and the Industry Assessment Study, constitute critical tools to evidence-based policy.
We are seeing an improvement as well in terms of the contribution of the sector in terms of our GDP, the country's GDP, which sits at about 1.13 billion in terms of contribution vis-a-vis the target of 2 billion. On that bit, we are saying that we are very optimistic that we are likely going to meet that target by 2027, because if we're looking at the numbers holistically and in terms of the GDP, when we start computing accordingly, we believe that the sector is actually contributed quite significantly to the sector. Of course, that doesn't come without its challenges. We do see some challenges. We have seen a little bit of a drop, particularly around November, December. I would say it's a significant drop. And this has particularly happened because our major source market, which is South Africa, has actually dropped in that particular period, and we're still investigating in terms of why that could be. We are also seeing some drop in terms of our market coming from Europe, our source market in Europe. And this is also particularly because maybe we know what happens when people plan their travels, the cost of travel and everything could probably be one of the factors that is making people coming from all over the world not to travel that much. Normally they would then prefer to travel closer home, which then says in terms of our recommendations, we want to encourage or emphasize that we push tourism, particularly from a regional perspective, so that it is not very long distances that people need to take when they want to come and visit our country. The one other encouraging thing, whilst I'm talking about that, is the Mozambicans' behavior. We really appreciate Mozambique as a market. I think we have noted that there's quite a good increase.
And that is your business brief. After the break, we speak to the Eswatini Tourism Authority. Stay with us.
Those that are in Spain must forget all the problems
ngoba
they have.
kuthi answer la kule tindlu temhlaba
Because the things of the earth have got no answer.
answer la ikhona khona
But the answer that we have
ikulona losetule
is
emazulwini
all morning.
nangishumayela nini ngisuke ngiyishumayela kwananami
When I'm preaching here, I'm preaching to
I
myself.
receive umoya longcwele
I receive the Holy Spirit.
I declare ukuthi a turnaround is coming my way
Memendela ukuthi a turnaround is coming in my life.
Akayithathe akahambe nayo.
Welcome back. This is Market View, and moving on with the program, the Eswatini Tourism Authority has reported a strong surge in the country's tourism sector, with overall growth reaching 7.5% last year. This positive momentum continues into 2026 as international visitor arrivals recorded an impressive 16.3% increase in February alone, bringing the total number of visitors to 84,744. However, despite this rather encouraging growth, challenges remain. During a presentation on the sector's performance held today at the Happy Valley, Sebenzile, the research and statistics manager at the authority, revealed a decline in tourist arrivals from Eswatini's key source market, South Africa, recorded in November and December last year. European markets also showed a noticeable downward trend, with tourism contributing more than 1.3 billion emalangeni to the country's gross domestic product. The sector remains a critical pillar of Eswatini's economy and a key driver of growth, job creation and investment. Sebenzile joins us now to unpack these performance trends, the challenges facing the industry and what lies ahead for Eswatini's tourism sector. Sebenzile, good afternoon. Thank you very much for your time. Let's start here. We are clearly on a recovery path with at least 16.3% spike in February. What's your interpretation of this surge?
Good afternoon to you and good afternoon to the viewers. As a sector, we are excited that in 2025, we were able to surpass the 1 million mark. And we are seeing a positive trend that says towards the end of the year, we should be able to have recovered to pre-COVID levels. That to us signals that there is continued interest and confidence in Eswatini in terms of its tourism product offering. Despite the macroeconomic challenges and geopolitical challenges that we see happening that affect tourism directly. But we are excited that we continue to see growth in our inbound travel, particularly from our SADC region. Like you have correctly alluded, we did notice a decline in the last 2 months of 2025 from South Africa, which generally accounts for over 65% of visitations on a monthly basis. And so because our sector is heavily reliant on that market, it becomes of interest to us to understand what would have been the factors that led to the decline. Otherwise, as a sector and as the tourism authority, we are looking and exploring at market diversification so that if one market underperforms, we look to other markets to support and sustain our sector. Now, Mozambique is a market that has shown or demonstrated to be very positive. It's the only market within the region that has surpassed pre-COVID levels by up more than 130%. And interestingly, Mozambique is one of the most valuable markets in terms of spend, where the travelers from Mozambique generally spend double or triple of what an average traveler from other regional markets would spend. So we are looking through a positive year, a year of growth in terms of visitations, and but also a year of growth in terms of revenue generation.
Sebenzile, the stats note that over 90% of visitors come from Africa, which is rather an indication of dependence or reliance on regional tourism. And here we are now, we've just seen a decline in tourists coming through from South Africa. If regional markets slow down, how exposed then is Eswatini's tourism sector?
What we are trying, taking into account what you've just narrated, what we are trying to explore is the domestic market. In general, and traditionally for all markets, the primary market focus should be the domestic market, followed by regional market, and then long-haul travel. For the reasons that we are seeing now, where issues of fuel increase will affect travel. So the longer you are away from a destination, the more costly it becomes. But these factors are also factored in terms of pricing of accommodation, of attractions, and of the entire value chain within our sector. So our focus now is, as the authority, is to leverage on the domestic market to understand it better. As today we have presented a study that we concluded in December that was exploring and trying to understand the preferences of the domestic market, because we have determined that Eswatini are able and willing to travel. If you look at South African statistics, they reveal that on average a year, the Eswatini on tourism and leisure travel spend over 1.3 billion. And that is an indication that there is willingness to travel and there is also ability. And so we are saying a portion of those travelers and a portion of those expenses made in South Africa should be made internally. So that is the market we are looking at. But also we can't take away our proximity to our neighbors means a captive market for us, a market that we should continue investing in terms of our marketing efforts. But the key issue here is identifying which markets are of value in terms of spend and prioritizing those markets. And that then balances out, like we are seeing now, that our tourism business continue to thrive, irrespective that long-haul travel, particularly from Europe, has displayed a declining trend since the beginning of 2025. And so that is how we are looking at mitigating the effect of the externalities that our industry experiences as a result of effects like increases in fuel, increases in energy costs.
Let's draw back a bit. South Africa has been the biggest source market. What would you say caused the drop in arrivals between November and December?
We are still investigating that, but what has come out immediately is that most economies, even within the SADC region, have been affected and have not performed to the level that they desire. And now, so at macro level, if economies are not performing, it then trickles down to the household level. And we understand that tourism is considered a luxury item, meaning it comes after provision of basic needs. Hence, South Africans now, those who are coming to Eswatini, are opting to travel within South Africa, which then relates to a cost issue, cost effectiveness issue. And this is why it was important for us to discuss this with our industry, to look at strategies and tactics that we could utilize to continue having this market coming through, because it is a key market that sustains our sector throughout the year. So it is a market that we want to be able to continue to invest in, but be able to get the returns. So what is primary for South Africans is that they are changing their behavior based on their economic circumstances at household level.
You did say, Sebenzile, that the focus now has to shift to domestic tourism. Given that we do have a 2027 target of at least 2 million tourists by the year 2027, contributing at least 2 billion in revenue, how best can we leverage the domestic sector in order to meet that target?
The domestic sector is primary for us in terms of their ability to make quick decisions for travel. So in comparison to a long-haul traveler, Eswatini can decide overnight to travel. Now, what then it means for us, because we know they are willing and they are able to travel, is how do we create customized packages for Eswatini? The domestic tourism study that was presented today gives us insights on the type of packages that are required for the different market segments. For instance, we got to understand that there is a target, there is a segment of young people who are actually spending more than all the other demographic groups. And the question is, do we have products that are targeting that market? And the other aspect is geographic spread. The study revealed that activities are concentrated between the Mbabane-Manzini corridor and to some extent to the Lubombo region. So there is a need to increase, to spread the attractions that we have in terms of diversity. This then will encourage longer stays. We are also looking to engage accommodation facilities in terms of what offering they can have that is customized for the Eswatini. One of the things that Maswati, through the study, advocated for are differentiated pricing, one pricing for the domestic market, one for international. So those are some of the issues that we're looking to discuss with our sector, whether that would be feasible. But also, it is important for our sector to take advantage of the low seasons that we have, where we have less international visitors coming through, so that beds are not empty in hotels, restaurants, and are not empty, and have these discounted prices to mitigate those effects. But ideally, what we want is extended stays. We would like to see slow mobility, where if you're a traveler, you spend as much time and exhaust your experiences within a particular place as opposed to the rushed type of travel that we normally see happening even within the domestic market. Another feature that came up is how do we package our culture and heritage, because the Maswati are really interested in that. So those are the issues that we're exploring that will then bring in diversity in terms of the products that we offer that are customized specifically for the domestic market.
Fair enough, Sebenzile. We'll leave it here in the interest of time. Thank you very much for talking to us. That was Sebenzile Kininza, who is the Research and Statistics Manager at the Eswatini Tourism Authority, just breaking down some of the numbers that have come out with regards to the performance of the sector. Otherwise, we'll cross over now to our in-house economist, Sanele Sibia. This is Market View.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Mbabane. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Those that
are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back for our final segment of the show, which is the market analysis segment. In-house economist analyst Sibia joins us virtually. Mr. Sibia, good afternoon. Thank you very much for your time. 3 weeks into the war in Iran, U.S. President Donald Trump issued a 48-hour ultimatum demanding that Iran reopens the Strait of Hormuz. We are just nearing or rather approaching the deadline. How have markets been interpreting this escalation?
Thank you, Notsile, and good afternoon to you and the viewer at home. So, what we're seeing happening, coming out of coming out of the White House, and also if you see what's coming out of Tehran and Tel Aviv, is this threat on threat type kind of rhetoric that we're seeing at present, where the White House issues a threat and Tehran counters the threat with another threat. But then that has actually led to, quite a carnage on the markets across the globe, where overall markets really are just struggling and trying to make sense of all of this. And just this we're seeing news coming out of the Truth Social, President Trump's own social media network, where he just posted that they've had productive talks with Iran. So we're seeing that penduluming in markets, with markets really just trading the news and not knowing what to expect, and with President Trump being more unpredictable by the day. So today we're looking at the Dow Jones Industrial Average down 433.96 points, and the Standard & Poor's Index down 100 points. All these indices not only are trading below their all-time lows. So that's how markets are interpreting it. That's what it's telling you, that markets really are not so much convinced with the war coming to an end, and also with whatever it is that we hope President Trump will bring into the markets. And then moving along to the Eurozone and the UK. The FTSE 100 has actually reverted below the 10,000 mark, sitting at 9,711.37 in terms of all share volumes. Now, that's largely driven by the Iran-Israel war, and the continuous protraction of this conflict with no end in sight. And we know that it has dire consequences for the European markets in terms of energy and oil prices. Europe was largely dependent on the Middle East in terms of their access to energy, and these numbers that are skyrocketing are basically just reminding Europe of that Russia-Ukraine war ensued, where they actually faced quite a significant pressure in terms of energy and fuel. So we're seeing the same story across the globe. Germany also below the 22,000 mark. That's for the first time we're seeing this in over the 2 years. We actually traced the markets here in my market view. The CAC 40 in France is back to those post-snapshot levels there, sitting at 7,422.10 in terms of all share volumes. Those are the numbers we last saw when President Macron called a snapshot election in France, and that's when the markets were so uncertain. But right now it's largely driven by that energy scare. And then coming down into Asia. So Asia and the entire Oriental region there is actually on edge, just as Europe is on edge. The Nikkei is back on that 51,000 mark. That's actually a 6-week low. The Hang Seng, is being tracked down back to the 24,000 mark, losing 894 points. And the Shanghai Composite Index as well is back below that 4,000 mark, since we're not seeing any efforts and any settling of the war between Russia and Iran. In terms of Johannesburg is also pulling back to those pre-GNU levels, sitting at 106. 868.40 in terms of overall share volumes, largely driven by the fact that right now Johannesburg is suffering from a couple of points here. Johannesburg is suffering from the loss of value in terms of gold and also suffering from the vulnerability in terms of the oil and the supply shocks, and basically also suffering an emerging economic curse where we often see, capital flying out of emerging economies into advanced economies in times of crisis like this one. The Eswatini Stock Exchange still sits steady at the 493.16 mark in terms of all share volumes, largely because our stock exchange is more of a dividend driven type of stock exchange, and the market valuation there is a bit different how they price in risk. Risk is largely priced in terms of how domestic companies are going to perform. And then in terms of gold,
Right, it seems we have lost Anele Sibia there. He was just sharing some of the latest in terms of markets and today's trade. Otherwise, this has been Market View. In the interest of time, we'll leave it here. Thank you very much for staying with us. Bye-bye.
Mswatu ingozi thula akayithathe akahambe nayo.